The Federal Reserve of the United States was unable to lower interest rates, and we have kept the rates unchanged for the 7th consecutive time. Donald Trump wants to bring crypto mining to the United States and is positioning himself strongly against CBDCs. No surprises for the financial market, as the Federal Reserve, decided yesterday in its latest meeting to maintain interest rates in the range of 5.25% to 5.50%. This marks the 7th consecutive time they have done so, following a slight reduction in the annual CPI in May, which resulted in an accumulated 3.3%. The FOMC committee insists that inflation remains high relative to the 2% target set by its members. Therefore, they have announced that it is not appropriate to lower rates until inflation decreases further. While this move was expected, it contrasts with the recent rate cuts by the European Central Bank and other central banks. As you may recall, the European Central Bank was able to lower interest rates. This has raised significant expectations about the Fed's decision on interest rates, which was announced yesterday, Wednesday, June 12. Looking ahead to the next meeting on July 31, the committee indicated that it would be prepared to adjust monetary policy if risks arise that could prevent achieving the goals. They will also evaluate all relevant data and indicators and may relax current conditions as necessary, leaving the door open for a potential rate hike if deemed necessary.
Amid the United States presidential campaign, Donald Trump has intensified his pro-crypto and anti-CBDC stance. The Republican Donald Trump, in an explosive statement, shows his unconditional support for cryptocurrencies, backing Bitcoin mining in the United States, attacking the Biden administration, and promising a future of energy dominance for the nation. He provocatively asserts that all remaining Bitcoins should be mined in the United States. The crypto president Trump lashes out against the potential central bank digital currency CBDC pushed by the Democrats, describing a digital dollar as a dangerous threat to freedom. Trump promises to block its implementation if he returns to the White House. In this context, he considers cryptocurrencies as the last line of defense against CBDC.
So, if you are sympathetic to our friend Donald Trump, we are in the perfect situation to make the following reflection. Now, you are looking at the Bitcoin chart, and we will place it in its daily time frame. And now look, we're going to compare it with the future of the S&P 500. Let's talk about the existing correlation and how to interpret the correlation between the traditional market and Bitcoin. We'll start from May 2020 and end around December 2021. In orange, you can see the S&P 500 price superimposed on the Bitcoin chart. Notice how the S&P 500 price was in a strong upward trend during this period, and here we ask ourselves, what was Bitcoin's price doing? Well, it also experienced an upward period. Although in that same period, we experienced a pullback, a market correction. An investor might say, hey, this could mean that the correlation is not so strict, not so pure. To which we would reply, of course, you're right, but I invite you to reflect on the following. We know that the crypto ecosystem operates with very serious, significant volatility. Therefore, it is plausible to understand that while the S&P continues to rise, while it remains bullish, we can expect a pullback in Bitcoin. However, as long as we see the S&P continuing to rise, that Bitcoin pullback will initially have an expiration date. We will assume and understand it as a pullback to then continue rising, since the predominant trend is clearly led by the S&P 500. Therefore, we will understand this small correction as noise, a pullback, or even a good opportunity. A good opportunity at this point. If you watch the early Crypto Insight videos, you will see that we were observing the end of the decline. Look how the old blind one whispers in our ear. This is a nod to the Crypto Insight team, but let's get back to where we were. Now look at the next period. Notice the S&P 500 price when it was falling. The orange line drops. What was Bitcoin's price doing? Also falling. Here, when we see the S&P 500 in an accumulation process, at the same time, we were seeing an accumulation process in Bitcoin. When the S&P 500 broke its creek and was making the classic test before heading to the sky, what was Bitcoin doing at that moment? Well, it was undergoing accumulation followed by reaccumulation, and at the moment of the S&P's creek test, Bitcoin was injecting buys to achieve exactly the same. As you can see, the correlation between the S&P 500 and Bitcoin is very serious. Perhaps in the past, we couldn't take this correlation so seriously due to the lack of data since cryptocurrencies were born practically yesterday. But now that we have more development in the chart and the crypto ecosystem is starting to see significant institutional volume, we can begin to value and study this correlation. So briefly, if we understand that the S&P 500 is key to the development and understanding of cryptocurrency prices, hey, what is the S&P 500 doing now? Let me explain. But before that, welcome to Crypto Insight, your ethical and moral channel for cryptocurrency technical analysis. Here, we really know what we're talking about. We We conduct advanced technical analysis that has been developed for over 12 years. We upload videos several times a week. If you're enjoying what you're seeing, let me know and leave a comment with your opinion. Like the video, subscribe to the channel, and click on the bell so you don't miss the next opportunity. Take a look at the S&P 500 chart. Always a very appealing chart to view. Ignore the bullish channel for a moment. Let's move to the 1-hour time frame. Remember, what were we observing in the S&P 500? Well, a bearish impulse and a complex corrective pattern ending in a wedge, which had broken, seeking the Z lines directive. Here, what we place on the table is that when we are in a Z pattern, don't try to reverse the market because these patterns are capricious and often do the supposedly unexpected, which is not to break and take the opposite direction. Therefore, let's not overanalyze the corrective patterns of impulses until proven otherwise. When we see that the Z directive has not been breached and the price gains traction, friends, the bullish trend continues, even if we are at all-time highs. When should we be on alert? And this came out with a bit of an Argentine accent. When we breach this directive, then we will be on alert. In the meantime, let's stay positive. And if you wonder why the S&P 500 is rising as it is, there's no doubt the culprit is the price of Shiba Inu, right? Just kidding. Nobody cares about Shiba Inu. The responsible party is Nasdaq. And why Nasdaq, basically? Nasdaq is driving the entire US economy at the moment. Why is Nasdaq particularly booming so strongly? Not. Let me tell you in 2 letters. AI, artificial intelligence. Have you seen the weekly chart of Nvidia? It looks like a crypto. See how it rises, all because of artificial intelligence. We also have Microsoft, Meta, Google. Everyone is working in this industry. And look, the class genius, heavily involved in artificial intelligence. See how investors are rewarding it. Now, Nvidia is the 3rd largest market cap asset among US stocks. In the end, AI is pushing the Nasdaq is pushing the S&P 500, and all of this, in summary, makes us positive in the medium to long term for Bitcoin and cryptocurrencies. Remember, in Bitcoin, we are in a zeta, and as long as it doesn't break through significant structures like we've seen in the S&P 500 and the Nasdaq, don't worry, this can continue, and this is where we need to pay close attention. Now, let's talk about the short term, which I know also interests you. Here we have Bitcoin on the 1-hour time frame, and the candles haven't multiplied. They've always been this way. So, what are we paying attention to? On one hand, we've already discarded the channel. It was very useful to give us that midline to look for that test, that double test which justified this bearish movement. But now, let's focus more on the defense zone. As you know, the continuation of the fall was something we were looking for, as well as its reaction and subsequent drop. From here, we already saw a stopping volume. Here is the volume. We presumed we'd see absorption, which ended up happening. Here's the absorption volume. If you ask us, the story continues. In other words, we have no idea how. But hey, let's let this run its course. Maybe it's a trap, who knows? But until proven otherwise, friends, let's stay positive. And if you look at Ethereum on the 1-hour time frame, see how it's a snitch. We come from a distribution that might be looking for that institutional target. Let's see if it gets there. Maybe not. Who knows? But the target is at $336. In short, we have a strong upward impulse. Here's the W, this is the I, and look at this Zen in this wedge. Therefore, hey, we are in a zeta. It may continue, we don't know, but it would be nice at some point if these absorptions and this stopping volume we're seeing in the cryptos continue. Here, the drawing is the least of it. It's more the concept, but we already value the possibility of seeing this creek to stay positive. And hey, will we be positive in the market forever? The answer is clear. When we see very specific events, we will be the first to switch from the bullish team to the bearish team. We have no ego. We don't think we can predict the future, and we have an ability to adapt to the circumstances dictated by the market. You know who is in charge, the one-eyed witch. Just kidding.
Now let's look at Solana on the 1-hour time frame. Thanks to cross-analysis, we can label a bearish corrective pattern in Solana. This is allowed by Ethereum, as we just saw. So after the strong upward impulse, we are experiencing the corrective pattern and are now in the zeta. During the drops, we detected stopping volume absorption and identified this area where the zeta has halted, which is where the institutions are buying. What are we going to expect then? We will wait for more absorption, and of course, we won't try to stop the zeta. We will seek more movement under this creek we've already identified to then, after all the absorption we're expecting, break it upwards.
And now, going back to the Cardano chart, what are we seeing? Yes, they've attacked that defense zone after a big drop. What did we analyze? That stopping volume? Did we presume a trap? And now they've set us a creek. If we say Ethereum and Solana, as you just saw in the analysis, are in a zeta, and hey, no need to turn it upwards, but at some some point, it will have to look up. So with Cardano, what will we say? Look, if the defense zone isn't broken, I don't bet on this idea, but it can happen, and we will believe the breakout and then go upwards. But if the crypto zetas push the prices, it is very plausible. In fact, it makes sense to me that it will take the defense zone. But this time, we wouldn't say it's the end of the world, as we almost always say when a defense zone is lost, because the analysis is very contextual. In the end, hey, let them keep accumulating. Let them break the creek, and then we go upwards. Remember everything I've told you about the S&P, the Nasdaq, artificial intelligence, the correlation of crypto and the traditional market, that we are in macro zetas in cryptocurrencies, and therefore let's not turn around, let's look up, and at the micro level, in cryptos. We've already analyzed those absorptions that can be the path or the beginning of a trend reversal. If you like this advanced technical analysis, let me know in the comments. Also, like this video, subscribe to the channel and click the bell so YouTube notifies you of new posts. And also share this content with your friends and other trading and cryptocurrency communities. Good luck and see you next time.